Hello everyone, Charles here with SlickTrade.net, and in this presentation I'm going to go over our market commentary for the upcoming week. So first of all, if you celebrate Valentine's Day, I would like to wish you a happy Valentine's Day. I hope it's relaxing, I hope you share it with loved ones, and just have a great day out there. So for the upcoming week, right here we have the New Zealand dollar. This is the 4-hour time frame. And last week we had our candle body break to the downside and hold. Excuse me. We went about 40 pips into profit, and then price kind of just went into a consolidation period. We just went back and forth between some levels that we have been for the past couple weeks now, since the beginning of January, really. So if you trade both sides, I do not personally do this, but if you do, then you could have gained close to 40 pips on the other side as well. Okay, so as far as market commentary results, because we shoot for 25 pips and around 25 pip increments, that will only show as a 25 pip gain. Okay, so if you're confused with the results, that is why. Also, if you can gain on both sides, I do not put that in the results either, because I really just recommend choosing or entering a trade based on the initial direction that the candle body breaks. Okay, so with that being said, I am just going to write this down so I do not forget for those results. Okay, and for the upcoming week, let's take a look here. I'm going to be coming over here. And our new defined range, if you are new to the room, I usually do a new defined range of around 50 pips, okay? Sometimes it's shorter than that, sometimes it's a little bit more than that, but I try not to do much more than 50 on the 4-hour time frame, okay? And reason being is this is just a shorter time frame, okay? See, right here is 36 pips, and I think this is a nice range. Right here we have experienced some excuse me, resistance, okay, at 3 different, well, actually no, 1, 2, 3, 4, 5, 6, 7, 8, and 9 times, okay, since the mid-end of December there, and more end of December, it's 28th. So that is our new defined range, the upper portion of it, okay? The lower portion is right around this line here. This is our whole moving average, okay? So price is above that. That's indicating that it's kind of headed to the upside. However, we are absolutely in a consolidation period, okay? So that is not a loner indicator to determine whether price is in a long or a short, okay? It's just a little added confirmation. Right here, we are in between supply and demand zones, okay? That's this blue here and this green here, okay? So, like I said, it's a little smaller than 50 pips, got 36, but that is okay. If the candle body breaks above and holds, okay, so that means that we don't just want price to break and then just have a wick be created. What we want is that candle body to break to the up or downside and actually close, okay? So each of these candles are 4 hours in duration. That is what that H4 means. Okay, so if you were to see price break above and it's only in hour 1, I would wait, okay, for the full duration of that candle. You don't want to get trapped in a trade. and lose out, okay, on some pips there. So, sorry, my computer or internet or something just had a little bit of a delay there. So here's our new defined range for the New Zealand dollar. And like I said, this is the 4-hour time frame. Okay. Lock these in and grab a screenshot for you guys. And we'll hop on over to the daily. Okay, so the daily, not much happened last week. Okay, we stayed within our defined range. We're pushing up toward that upper level here of the 0.72401. But price is still in that consolidation period, okay, or new defined range. So I'm just going to keep those numbers the same. Nothing has really changed. Overall, on the daily time frame, we are in a long trend. However, until we break and continue up and create a higher high than 0.73022, we'll just see what happens with price, okay? What we could experience is a correction. Well, really, we've already experienced this initial correction. We could experience a deeper correction around the 0.70030 level. But if it breaks, if that level does not hold, then more than likely we will be in a full trend reversal to the short, okay? So that's the plan for the New Zealand dollar. As far as the Aussie dollar, last week we had a candle body break to the downside. The candle body held, and we moved up about 81 pips, okay? As far as results for market commentary, that will only show 50 pips, okay? But if you manually trail, you more than likely, or excuse me, not 50 pips, 75. Like I said earlier, we go by that 25 pip average or so, especially for those that are still new in the room, or if you have a trail stop that automatically trails for you, if you're using that indicator at all, or expert advisor, and you have it set to that 25 pips, then that's all you would have gained was 75. So if you trade both sides, then you could have gained on both sides, okay? But again, I do not include when price gains on both sides. I just choose the initial break. So for the upcoming week, what do we have in store? We're up into a zone almost. We have not quite broke in there. Right here is a pretty solid support level. Should I bring it right there? As you can see, price has hit multiple times, okay? Clear across the board. So this is a good support level. As far as a resistance, new key level, I'd say it's right around here, okay? You can see price coming to this level multiple times, okay? And like I said, I want to keep it around 50 pips, and it is 39, so we are in the clear, okay? That upper key level is here, and our lower key level of the new defined range is there. Okay, so that's what we're looking at for the 4-hour time frame. And for the daily, okay, same thing as the New Zealand dollar. We are still within this new defined range, okay, or this upper and lower key level. We'll see what happens in the upcoming weeks. It looks like it wants to push up, but we were already in a long trend. Prices in that consolidation period. We have already had our initial correction phase. Doesn't mean we could not have a deeper correction or a complete trend reversal. If this key level of 0.77780 holds, then we could be looking at a double top pattern, okay? But we'll see. If price breaks above or below, look at, around that 25 pip increment for a trail stop, but I recommend manually trading that, okay? Because on the daily time frame, you will normally get closer to around 50 pips. That's what I usually do. I shoot for 50 pips for take profit 1, and then 2 and 3, and right around there, okay? So, and I don't mean exactly 50 pips. You want it to be at previous support and resistance levels, okay? So if that means it's 40, then go for 40, okay? If it means it's 60, go for 60, all right? You really want to learn the key support and resistance levels, or you can use the indicator. Well, we provide multiple indicators as far as support and resistance here. Okay, so if you're new, just load that up, okay? This indicator in particular is going to give you your monthly, your weekly, your daily for the support and resistance, okay? You can look at this other one here. Oh, I don't remember what I called it. You can use your supply and demand. Okay, these zones are going to give you a little bit clearer on some of your key support resistance levels, okay? So if price were to break into here, then you'd expect, just looking at this, okay, that price will more than likely head down to the bottom of that zone. But look here, you've got this key level where price kind of hit, came up, hit, came up. You've got some candle wicks here, okay? So what that shows me is you'd want that take profit to be there, okay? So again, if price breaks to the downside, then here would be your take profit 1. Lower portion of this zone here would be your take profit 2, okay? And so on. 3. Okay? If it breaks to the upside, here's your take profit 1, upper portion of the zone. Lower portion of the zone would be take profit 2, okay? And so on. Look at what price has done in the past, okay? History repeats itself, clear across the board in life and in trading, okay? So I'm going to keep, like I said, those key levels, new defined range, the same, but there's a little plan, okay, and a little visual on how to trade this, if depending which way it goes, okay? Dollar franc. On the 4-hour, we had last week, excuse me, a really nice push to the upside initially. Okay. Wasn't a big move though, 33 pips, okay, but you got your 25 at least on that. If you traded both sides, then you could have gained both, but like I said, stick with that first one. Okay, and for the upcoming week, what do we have in store? As far as a new defined range, I would say right here we really experience, just on these 3 candles alone, and looking at this wick, okay, price is definitely kind of resisting there. You could bring it down to this level, but if you did, that is really, really close to where price is already at. I don't recommend that, okay? Give yourself a little bit of a cushion and look at the next level up or down when planning out a plan of attack for the upcoming week or month or whatever duration you use. Okay, you can do this with any time frame, any chart, any asset. Okay, I personally like to stick with these, or some of the main dollar, USD pairs. Okay, but everybody's different, and it depends what time you trade, how many trades you want to be opening. Everyone's tolerance is different, okay? And some people like to be active every day in the market. Others do not. Like me, I just like to check in every now and then. Before, when I was trading, I would be getting in there every day, sometimes every hour, and that's just too much like gambling to me, and then when you have a day that just goes against you, it can mentally impact you and your trading. Along with your trading results, you start to make poor decisions when you do that. So always just take your time, okay? If that means you have to hone in and only take one trade per week, then do that, All right, there's our plan for the dollar franc on the 4 hour. Now, as far as the daily, okay, we definitely had a little more movement with that. We came back down toward the whole moving average this last week, okay, and right here. So we had broke out of that consolidation period. We had a beautiful move to the upside, and like I said, we may have initial correction around that 0.894699 level. Okay. Let me grab this. Okay, here. Right here. Okay. I wasn't seeing it at first. A little too much going on that chart there. So as you see, price came down to that level. Candle body broke and continued down a little further. Okay. So I said if support holds, then continue to trail your stop. All right. But we had a deeper correction than what I had planned for. Went a little below by 46 pips. Okay, so more than likely you are out of this trade at this point. You may have gained to the upside initially. If you did not get out of the trade, then you more than likely broke even on that. But for the upcoming week, since we had that deeper correction, we may see a push to the upside. Price is making up its mind, okay? These are still some major key levels. We have not created a lower low than our deepest low here, or even here, where price started to kind of turn around, okay? So this may be a trend reversal with that deeper correction in play last week, and we will see, okay? If price breaks below this 0.88489 level, then we will more than likely see price head down to 0.87899 level, okay, or close to it. If this level holds, then we'll keep these key levels right here, okay? So as far as new defined range, if you're not in a trade, if you're new to the room, any of that, I would say here is our new defined range. Get rid of this correction. And here are our key levels. Right here. Actually, I'm going to say the other one is right here. This is a little bit closer, but price has absolutely hit this level a number of times. Okay. So that is the dollar franc plan of attack here. I'm gonna move this over a bit. Grab screenshot. So euro dollar. Last week we had a break to the downside, candle body held, and price headed up about 65 pips. Okay, as far as results are concerned, that would be a 50 pip gain, because we keep that 25 pip. Take profit. And if you traded both sides, then you gained from both sides. Okay. So for the upcoming week, price is above the whole moving average. We have not created a new high here, but we could, if price is in fact turning around, then this would be your first leg, second leg. Okay, so we'll see. If price breaks above that, then we will continue along. Okay, if price breaks below, then we may see a gosh, excuse me, a correction or deeper correction around this level here. Okay, and it could continue down from there. Just plot out support levels. $43 pips. That's a nice range. Right there. And the euro dollar, the previous week had broke out of consolidation. We may be seeing a trend reversal on the daily. Let me just plot those in. Okay. But just like the dollar franc, we did have a continued correction up. Okay, so we will see what happens here. As far as key levels to watch, I would say right here is a beautiful upper key level, and here's a nice lower key level. Okay, so if price breaks below, then you would expect it to head down to about here. If it breaks above, then we're going to be heading up to there. Okay, but we'll see what price chooses to do. So key levels are here and here. Okay. Pound dollar. We haven't been trading this one on the oh goodness, 4-hour time frame. I've just been doing the daily lately. The 4-hour time frame was just getting a little crazy. Okay, we went into a heavy consolidation period. You can even kind of see it here on the daily time frame, where price is just going back and forth and back and forth. And it's much clearer on the daily, but on that 4-hour, it was very congested, and there were a lot of inconsistencies with candle bodies versus wicks. If you were trading it, you could have easily got trapped into some trades. So for now, we're just looking at the daily instead of the 4-hour for this particular asset. Okay, so last week, overall long trend that has continued. Okay, we created a new high. We broke out of that consolidation period and are in continuation. So currently in a continuation period, and our key levels were broke to the upside last week to create a new high, and we hit that first take profit and continued up. So if you were trading this, you should be about 100 pips in profit there. You may have gotten out of the trade. If you're trail stopping, then price did start to come back down. If you're manually trading this, then you're more than likely still in it because we just had candle wicks that came back down to that level. There would be no break even there. It would have continued up, but if you exited the trade, then you would have gained around 50. But like I said, if you're still in it, then you are about 100 pips in profit there. Okay, as far as new key levels, like I said, we're in a continuation. Okay, so we are absolutely in that long trend. What we can expect in the upcoming week is a further correction. Okay. You may see a correction down to the 1.37533 level. You could see a further correction down to the 1.36776 level. And if we break below that, that would take us below the Hall moving average. It would take us below our trend line here that I drew in. I think last week I had drawn that in. It could have been the week before. I don't remember offhand. But that would mean we'd be going into a consolidation period with a potential of a change in trend. Okay, trend reversal. So we will see. As far as key levels, I would say this right here, upper level. And here. Okay. There we go. All right. So that is the plan. I hope these videos are helping, and you guys have a good one. Okay. Make sure you're using proper risk management, and don't trade, more than your account can handle. Make sure you're trail stopping, and that's about it. you guys have a good one, okay? Enjoy the rest of your weekend, and have fun in the market this week.